Definitely what we are seeing is that the IT pack is definitely not boarding up well. And Kunal, we did discuss in the morning itself that the IT could be an underperformer, like could see some shade of red at least today. Given the fact that yes, stocks like Infosys, HCL Tech, they are down in trade and one of the top losers in Nifty 50. Any such stock, do you believe that the correction could be more even from these levels?
Yeah, I believe large cap IT stocks, the correction should extend itself over the next few weeks. What happened was, the IT index, when you look at this from 2020 4 highs, was almost at 46,000 levels. Very recently, the index was almost at 43,000 mark. But then from 43, so the first 3,000 point correction for the IT index was a bit slow, staggered. But the recent 3,000 point correction from 43,000 mark towards sub 40,000 mark, and I think at 37,800 where it's trading right now, the pace of correction was very steep and sharp for the Nifty IT index, and that I believe is a concerning point. And generally, when you see such kind of a sharp correction, it indicates that there's further room for the index on the downside. For example, we were looking at FMCG names just about 3-4 months back, where there was a first leg of correction, then a mild consolidation, and then the second leg of correction happened into these FMCG names. I would expect similar trends for the IT names. So my sense is that large cap IT stocks like TCS, Infi, Wipro, etc., they could further drag down over the next 1 to 2 weeks at least.
Okay, for the slump in IT, that is what Kunal is anticipating. Sunil, what do you think would be the underperforming pockets in the market in the very near term?
I still think the export-oriented pack is the one which is both sentimentally going to be affected by the tariff costs and the slowdown in the world trade as we now move to a multipolar world thanks to the Trump's tariff tantrums. At the same time, another factor to look at is in terms of dumping by China. See, one of the reactions to Trump tariff thing is if China is taking a very hard stance and there is a slowdown, they are likely to try to dump into other countries. Now, India can put import duties and prevent those Chinese dumping from coming here. But if they go to other countries and are export-oriented sectors. So I think it's a time to be cautious around the export front until this tariff scenario. So that's the first thing which is going to get impacted. And I think it makes sense to wait and watch.
Stay away from some of these export related counters and plays there. That's the word coming in from Sunil. But another stock within the FNO space that after so many days is doing well is Canfin Homes. The stock is up around 4% in trade. But Naresh, how do you see the technical setup for this particular counter?
The stock has made a good recovery in the last 3-4 sessions, but overall trend is weak. 660 is the first resistance and next is at 700. So for now, the risk reward is not great at current levels. Should see a lot of selling pressures around 655, 660 levels. So would wait out, let it make a base and then maybe look at it.